Let's talk about this ugly move in stocks this morning. Stock futures are down over 1%. And if we don't get a meaningful bounce today, this is going to be the weakest one-day decline in stocks since late March. So this is a big move, and there's a very good chance that this move could continue lower. And the main reason for that has to do with this chart over here. This is U.S. 10-year yields. U.S. 10-year yields, if we look at the weekly chart, actually the monthly chart now to go to, is at its highest level since May. So basically a one-year high, almost a one-year high. US 30-year yields, which is all over the news stories this morning, is also at its highest level in over a year at 5%. 5% yield. This poses a lot of problems for the U.S. economy. It's a bad thing, not a good thing. And it's particularly bad for stocks because, if we take a look at this move that we have today, when we have higher yields, the problem is that, your credit card costs, your mortgage costs, the cost of borrowing for businesses and consumers surge. And no one is really recognizing this right now. I mean, yes, it's being talked about in the media, but when I say no one, I mean the markets have been ignoring it for over a month. And now they may be starting to pay attention. A lot of this rally, a lot of this enthusiasm came from the lack of bad news in the Middle East and also the hope that we'd had some good news out of China during Trump and Xi's visit. The visit is drawing to a close, and while initially it seems like some of the headlines were good, if you take a look at some of the latest headlines, it says Trump told Xi, I don't want to talk about whether the U.S. will defend Taiwan from China. And then he says he will soon make a decision about sanctions on Chinese companies buying Iranian oil. I mean, if this meeting went well, these headlines would say Trump is not doing sanctions on Chinese companies, and Trump is agreeing to stay out of maybe China's tensions with Taiwan. Either way, these are not good headlines, in my opinion. And the fact that 30-year Treasury yield tops 5.5% first time in over a year is actually bad news, not good news. So I'm worried about this move. I think that we could easily come down to this level here in the S&P, which is basically about 200 points from where it is right now. And, that would still be a correction within the overall uptrend. And of course, it takes some of the exuberance out of the markets. There's been too much exuberance. Now Trump could come in and say the Iran war is over. Of course, there's no war right now, but you could easily save the markets by saying that the Middle East conflict is done and, still kind of get the win that he wants. But we really need to shake off this exuberance. And I think this loss could lead to further losses before stabilization.